Hello, my name is Mitch Hilliard, and today I will be walking you through a giving voice to values case called Franklin Industries Whistleblower, found in our class textbook, Ethical Obligations and Decision Making in Accounting. I start by illustrating a scenario. Natalie is an assistant manager of the accounting department and is told by the accounting staff of unusual transactions they have found, which seem to be with a non-existent company. They discover that $5 million has been funneled into this company, which is actually owned by the department manager's sister. Investigating further, they found that this company then sent the money to different companies owned by the department manager. Natalie reports this information to the controller, who dismisses the situation, and shortly after, Natalie is demoted to staff supervisor. Feeling this was an act of retaliation from uncovering the embezzlement, Natalie files a complaint with HR. Now we get to the problem of the situation. 6 months after the complaint had been filed, HR ruled that she had not been retaliated against, and that no embezzlement had even occurred. Furious, Natalie meets with one of her friends, who tells her that she shouldn't take the matter any further. He says that he has been with the company longer and knows the board of directors is mostly inside directors. He also tells her how the board is willing to do whatever the CEO wants them to do. Natalie knows that she needs to act, but she doesn't know how to go about it. Now we will use the framework. The first step is to identify the main arguments that she will need to counter. In other words, what will the board's reasons and rationalizations be? The most likely outcome is they will dismiss everything right off the bat and say that HR ruled that nothing happened and they don't want to waste any more time on it. If they do hear her out and believe her, they could say that the department manager has been a loyal employee and with the company for a while, maybe he's going through a hard time and they don't want to fire him. Lastly, they could maybe say that the amount is immaterial to them and not something they want to waste their time with. With regards to the retaliation claim, they could easily say it has to do with her recent performance. The next piece of the framework is to consider what is at stake for the different parties. If she convinces them of the embezzlement, it could mean that the department manager will lose his job. If they don't believe Natalie, she could be jeopardizing her future with the company. She has already been demoted for bringing this embezzlement scam up to somebody else. If she does it again, she could possibly be demoted again or even fired. Lastly, her values are also at stake. If she does what everyone else has told her to do and does nothing, then she will be compromising her values. The next piece of the framework is for Natalie to identify what levers she has to influence the board. She could use some of the staff members who initially discovered the embezzlement to support her. She could use her track record with the company to show that there was no basis for her demotion other than reporting the embezzlement. Lastly, she could use the internal auditors to back her up, like the staff members. The last piece of the framework is to identify the most powerful and persuasive response to the board's argument. Like I already said, their most powerful argument against her will be that HR already investigated and found no wrongdoing, and that there was no embezzlement. So Natalie's most powerful response is to prove them that the embezzlement did happen. She could use physical evidence to back up her claims. If she can show that the embezzlement did happen, it is easy to then see that she was demoted because of it, and anyone looking in from the outside would have to agree with her. However, Natalie also has another option. She doesn't just have to go to the board. She could file a whistleblower claim with the SEC under the Dodd-Frank Act. This act prohibits retaliation from employers against employees who uncover fraud. Whistleblowers that are discharged or discriminated against can use this private cause of action. With the information given, it seems like Natalie could easily argue that this happened to her, and she would be able to find relief through this outlet. I personally believe that the second option is the best route for Natalie. The company has already chosen to overlook what has happened, and going to the board seems like it will only make matters worse. The second option seems to be a safer bet, and one that will give Natalie the outcome she is looking for.